Hey, it's Tyrone Jackson, the Wealthy Investor from Wealthy Investor Trade School, coming at you with another stock market update. Okay, most of the time I come to you, I have really good news about what's going on in the market, and sometimes I have a little bit of sad news. And the sad news in this update is all about Toys R Us. Well, it seems that as of yesterday, Toys R Us actually have filed for bankruptcy protection. Does that mean that that is a stock that you and I want to own? Probably not. You see, they're in debt to the tune of about $400 million, and they're trying to stay alive in this game. As you know, we're in a market that is changing. We're in a world that is changing due to technology. But it's not only Toys R Us that's kind of swept up in this changing technology, because like the movie business, the toy business is all about distribution. And Toys R Us, major distribution of toys for brands like who? Well, in this case, Mattel. Now, you hear me talk about a lot in the Wealthy Investor Program this idea of co-relationships, companies that do business with other companies that are publicly traded. It's a strategy that I endorse and shed light on constantly. Why is Mattel stock year to date dropping? Why is it going all the way down from $30 a share, which you can see on this year to date chart, all the way down to where it is right now to $15 a share? Well, their major distributor is who? Toys R Us. And if these stores are going out of business, where do you sell toys? Well, you can't sell them at physical stores. So it turns out Mattel is not the only company affected by this. The other one is Hasbro, a major toy maker and distributor in its own right. But notice the stock's performance year to date. You see, 1 year ago, the stock was around $79. It was soaring. But when it looks like the toy business in general is in trouble, Wall Street will have a reaction to that. And this is why you have to have a financial education and really understand the stock market. If you're putting your money in the market, you simply can't close your eyes and hope for the best. You must understand how companies make money and look at the stock price going from 115 and it's just slowly dropping down to where it is 94. Okay, what is helping feed this new trend? Well, everyone is shopping on Amazon. And notice Amazon stock year to date. In January, you could have purchased your shares at $749, which I know is a lot of money per share. But notice how the stock price has steadily declined, a little volatility here, and it will start to head back up here very, very shortly. Well, see, these are known as trends. So if the air is coming out of the toy business, right, and we want to trade and invest and make money in the stock market, looking at Mattel here, Hasbro here, Amazon is heading up here, we may not want to buy Amazon shares right now at $9.69. Instead, I've been recommending, if you're in the toy sector, you rotate out, and now is the time to own the stocks that are processing credit card payments online. This is a powerful, powerful shift. It is time to change, to sell out of certain sectors and roll into other sectors. And here's a chart of Mastercard, member of the S&P 500 I've liked for a long time. A year to date, notice this stock was at $103 a share, and it is on its way up. Why? We're coming into prime time when people shop online with their credit cards, which is the fourth quarter or Christmas season, and this stock should be going higher. But what if you wanted stocks where people of the companies that are actually processing credit card payments? Wouldn't you want to own them before the $100 cross? Of course you do. And that's what I've covered in the last couple of weeks here in Trade School. Which stocks you should own now that are going to win big in the next 52 weeks. So we know that we're always going through a shift in the stock market. Toys R Us has filed for bankruptcy, $400 million in debt. That affects their distribution partners, in this case, which happens to be Mattel and Hasbro. And participating to this, what we call secular trend shift in the stock market, would be something like Amazon.com, which is benefiting. But you're not going to jump in, most people are not going to jump in at $969 a share and start purchasing Amazon. If you own it now, I suggest you hold it and wait for a 10-for-1 stock split, which could happen within the next year or so. But you want to own the people who are processing payments online. There's an awful lot of money to be made there, and these stocks are in favor. Hey, don't try to do it all alone. I am here to support you. Start your trade school membership now at witradeschool.com. That's when you're going to move the fastest. Remember, WI Trade School is all video, 24 hours a day. Some people are now calling it the Netflix for stock market trading and investing, and I'll take that. I'll answer your question each and every week inside of Trade School once you start your membership. But in this market, make sure that you are focused and always, always purchasing winning stocks with the greatest probability of going higher. Tyrone Jackson, the Wealthy Investor, saying thank you for watching this video, and I'll see you this week inside of Trade School.